Welcome back to the deep dive.
Good to be here.
So we've been going through the NATCO Pharma Q1 results for fiscal year 26. That's the quarter ending June 30th, 2025.
We have indeed. And it's quite revealing, this earnings presentation. It's not just a set of financials.
No, it feels much more like a strategic blueprint.
It really does. So for you listening, what we want to do is pull out the really key insights from these documents. We're looking at three things, basically.
Okay.
First, just getting a handle on their financial health right now, the scorecard, if you will.
Right.
Second, we need to break down where the revenue is actually coming from. It's quite concentrated.
Mm-hmm.
And finally, maybe the most interesting part, we're digging into the big strategic bets.
Yeah.
These multi-million-dollar plays they're making for, future growth, potentially the next decade.
Yeah, and that really is the core tension here, isn't it? You've got this stable present, but it seems like it's all funding these, well, almost moonshot-level bets for the future.
That's a good way to put it.
Now, before we dive in, we should mention the usual caveats, right? These presentations always have disclaimers.
Standard stuff, yeah. Forward-looking statements, risks involved.
Exactly. Things like, will the strategy actually work? What about regulatory hurdles? We're just looking at the data they've presented, acknowledging those uncertainties are definitely there.
Absolutely critical to keep in mind, because as we'll see, some of these strategies are definitely high risk, but potentially very high reward.
Okay, let's get into that first piece then. The Q1 FY26 financial scorecard, the big picture, first top-line revenue.
Right, so consolidated total revenue for this quarter came in at 13,906 million Indian rupees. That's INR 13,906 million.
Okay, and how does that stack up?
Well, for context, the same quarter last year, Q1 FY25, was slightly higher, 14,107 million.
So roughly flat year over year, a little dip, but essentially stable.
Pretty stable on the top line, yes. Not really showing big growth there, not yet anyway.
But I gather the real story isn't revenue stability.
No, the key financial headline, the thing you really need to grasp, is what's happening with profitability. The margins.
Okay.
Their EBITDA earnings before interest, tax, depreciation, and amortization that look pretty robust. INR 6,327 million.
6.3 billion rupees. Sounds good.
It is good, but you need to look at the margin. That tells a different story.
Right, the EBITDA margin itself, what was that?
For Q1 FY26, it was 45.5%.
45.5%. I mean, in most sectors, that would be absolutely fantastic.
It would. But here's the kicker.
Yeah.
Compared to last year's Q1, back then, the margin was 60.5%.
60.5. Wow, okay, that's a drop from 60.5 to 45.5. That's 15 percentage points. That's substantial.
That is the number that jumps out from the financials, a big contraction in profitability.
So what's driving that? Any clues? Is it pricing pressure in their main markets or maybe spending more on R&D for those big bets?
It's likely a mix of both. Aggressive price erosion in generics, especially in the U.S., is a constant battle. But they're also ramping up spending significantly on R&D to fund these future initiatives we'll talk about.
Right.
It probably signals that the easy wins, the low-hanging fruit in their traditional generic space, is getting harder to grab.
Makes sense. But even with that margin compression, they're still making good money, right?
Oh, absolutely.
Yeah.
Highly profitable still. The profit after tax, PAT, was INR 4,803 million.
So over 4.8 billion rupees. And the PAT margin.
That came in at 34.5%. Still really strong performance, despite the squeeze.
Yeah, 34.5% PAT margin is nothing to sneeze at.
Definitely not. And you see that reflected in the earnings per share, too. Basic and diluted EPS was INR 26.84 for the quarter. They are still fundamentally a cash-generating machine.
And that cash generation leads to, well, their financial strength. The war chest, you called it.
Exactly. The presentation highlights their net cash position as of June 30th, 2025. It's massive.
Yeah.
INR 34,740 million.
34.7 billion rupees in net cash. Okay. That's the foundation that lets them make these ambitious moves we're talking about.
Precisely. That kind of cash doesn't just mean safety. It means flexibility. It means they can pour money into fields where, development takes years, costs are enormous, and the payoff might be way down the line.
It lets them play the long game, takes off that short-term pressure.
Takes it right off, which is crucial for deep science R&D.
Okay, so financially stable, highly profitable despite margin pressure, and sitting on a huge pile of cash. Let's move to the second part. Deconstructing that revenue, nearly 14 billion rupees this quarter. Where did it actually come from?
Yeah, and the answer is it's surprisingly concentrated. Starkly concentrated, actually.
How so?
You look at the Q1 FY26 breakdown they provided. The absolute engine room is formulation exports. That includes
Okay.
profit shares, license income, things like that.
And the number.
INR, 11,265 million, 11.2 billion rupees just from that segment.
Wow. Okay, what percentage of the total revenue is that?
That's 78.6%.
78.6. So nearly 4/5, almost 80% of their entire income hinges on selling finished drugs outside India, primarily the US, I assume.
Primarily the U.S., yes. The most competitive, but also the most lucrative generics market.
And there's the risk factor, right? If almost 80% comes from one area, especially one known for pricing battles and regulatory complexity.
That's the key takeaway on risk exposure. You are absolutely right. It means the company's fortunes are disproportionately tied to what happens in that specific segment. External volatility hits them hard.
Which makes this diversification strategy we're hinting at not just a nice to have, but more like a necessity.
An absolute necessity for long-term resilience, anyway.
Okay, so export formulations is the giant. What about the other pieces?
Much smaller. Domestic formulation sales within India, that was INR 1,070 million, only 7.6% of the total.
7.6%, tiny in comparison.
Very. Then you have API revenue selling the raw ingredients. That was just INR 526 million, or 3.8%. And finally, crop health sciences, INR 347 million, making up only 2.5% of revenue.
So the story really is export formulations. Everything else is, relatively speaking, minor right now.
For now, yes. And that core export revenue depends heavily on their pipeline for the U.S. market. Which brings us neatly to our next section.
All right, how they plan to keep that export engine running. They're targeting blockbusters, aren't they?
They are. And their strategy leans heavily on a couple of specific U.S. regulatory pathways.
This is where it gets a bit technical, but it's really important for understanding their approach in the U.S. generics game, right? We're talking Para 4 filings.
Exactly. Para 4 filings. That means they're challenging an existing patent on a brand name drug, an NCE or new chemical entity, before that patent is set to expire. It's an aggressive move.
And the other key term, FTFs.
Yes, the real prize. Key solo FTFs.
Yeah.
First to file.
First to file. Why is that the gold standard?
Because if you're the first generic company to submit a substantially complete application challenging a patent and you win the challenge, the US FDA gives you 180 days, 6 months of market exclusivity.
Yeah.
Just you.
So for 6 months, you're the only generic version allowed on the market alongside the original brand.
Correct. And if you're talking about a blockbuster drug, maybe billions in annual sales, those 6 months of being the only generic, that can generate enormous revenue. It can literally pay for years of R&D for other projects.
A massive incentive. So how big is their pipeline in this area?
Well, the presentation states they have 28 products that are already approved in some form, either tentative or full approval.
Okay.
But the strategic focus, the ones they really highlight, are the 13 designated key solo FTFs. Those are the potential big wins.
13 shots at that 180-day exclusivity. What kind of drugs are we talking about? Any specific examples jump out?
Oh, yes. Some very big names. They're targeting the huge diabetes and weight loss space, specifically mentioning Ozempic and Wegovy.
Wow. Semaglutide.
The very same. Semaglutide. Getting an FTF on a drug like that, that would be transformational for any company, a total game changer.
Absolutely. But it's not just metabolic diseases, is it? They have a strong history in oncology.
They do, and that continues. Their pipeline is packed with complex, often injectable cancer treatments and other high-value areas too.
Like what? Give us the AHA list.
Okay, so besides semaglutide, you see the anticoagulant Eliquis, which is apixaban.
Big drug.
Huge. Then a whole suite of advanced cancer therapies. Caprolus, carfilzomib, Imbruvica, ibrutinib, Lynparza, olaparib, and Belversa, or tifitinib.
Complex molecules, high-value targets.
Exactly. And they're also going after the migraine treatment Nurtec, which is rimegepant.
Yeah.
It shows real technical depth. Going after these kinds of products. High-stakes generic development.
Okay. So the current picture is solid, profitable export business fueled by an aggressive push to launch generic versions of massive blockbuster drugs, aiming for that lucrative first-to-file status.
So this is the Today story, yes.
But we talked about the risk, the reliance on that segment. And that massive cash reserve, the INR 34.7 billion, how are they using that to build the tomorrow story, to move beyond generics?
Right. This is the big strategic shift. It's where they pivot from, leveraging other companies' innovations via generics to actually creating entirely new medical paradigms.
Okay.
We're looking at 5 specific major investments in internal programs they highlighted. High risk, high reward stuff. This is where NATCO stops looking just like a generics firm and starts acting more like a biotech venture capital fund almost.
Interesting. Let's break them down. What's the first one? The biggest external bet, you said.
That's a Genesis. They've put in US dollar $8 million.
$8 million into a Genesis. What do they do?
This is really out there. Xenotransplantation.
Xenotransplantation. You mean like animal organs for human transplant?
Exactly that. Developing human-compatible organs, typically using genetically engineered pigs for transplants into people. The fact they put $8 million here tells you how far out they're looking.
Wow, that feels futuristic.
It does. But the presentation gives crucial context. It mentions the first ever successful transplant of a genetically engineered pig kidney into a living human patient, which happened back in March 2024.
Ah, okay. So that shifts it from pure science fiction to, well, maybe plausible science.
Precisely. Suddenly, an $8 million bet makes more strategic sense if you think this technology could actually scale and address the huge global organ shortage.
Okay, that's a big one. What's next? Number 2.
Number 2 is Celigen Therapeutics, a US dollar $2 million investment. This one is focused on advanced cellular engineering and gene therapies.
Cell and gene therapy, hot area. What diseases are they targeting?
Really tough ones. They're looking at 3rd and 4th generation CAR-RT therapies for leukemia and lymphoma.
CAR-RT, remind us quickly.
Sure. Chimeric antigen receptor T-cell therapy. Basically, taking a patient's own immune cells, their T-cells, engineering them in the lab to recognize specific markers on cancer cells, and then putting them back in to fight the cancer.
Okay. And 3rd and 4th generation means?
Trying to make them work better, last longer, and be safer than the earlier versions. It's cutting-edge stuff.
It's definitely complex. What else is Celigen working on?
They're also developing gene therapies for beta thalassemia and sickle cell disease. These are inherited blood disorders.
Debilitating conditions. Any clinical progress there?
Yes. A key point mentioned is that the first human dosing for the leukemia CAR-RT therapy is set to begin shortly in India.
Okay. So that moves it from just an investment on paper to actual clinical trials starting. Significant step.
Very significant.
All right. 3rd investment.
3rd is iStem, a smaller bet, US dollar $1 million. Their focus is cell therapy for dry, age-related macular degeneration, or dry AMD.
AMD, a major cause of vision loss.
Exactly. Their specific therapy is called EyeSight RPE, and the update is that phase I dosing is currently ongoing in India.
Okay, so another one in early human trials. We've got xenotransplantation, CAR-RT for cancer, gene therapy for blood disorders, and now cell therapy for blindness. Quite a spread.
Remarkable diversification in these future bets. But it's not just external investments. The 4th initiative is arguably even more important strategically.
Why is that?
Because it's their own internal discovery. NRC 2694A, this is a molecule discovered by NATCO Pharma itself, a new chemical entity, or NCE.
So this isn't a generic or an investment. This is their own potential drug. What type of drug is it?
It's described as an orally administered small molecule tyrosine kinase inhibitor, a TKI.
TKI, those are often used in cancer treatment, right? Targeted therapies.
Exactly. They work by blocking specific chemical signals inside cancer cells that tell the cells to grow and divide. It's a very targeted approach compared to traditional chemo.
And what's the target for NRC 2694A?
A really tough area. Recurrent or metastatic head and neck cancer patients whose disease has progressed even after treatment with Keytruda.
Keytruda, that's a major immunotherapy. So this is for patients with very advanced, difficult-to-treat head and neck cancer?
Precisely. A population with huge unmet need. And the big news here is that a phase 2 clinical trial has been approved by the US FDA.
Phase 2 already? Approved by the FDA? That's significant progress for an internally discovered molecule.
It really is. And patient recruitment is apparently ongoing in both the US and India. This signals a serious shift for NATCO towards becoming a developer of proprietary oncology drugs, not just generics.
Okay, that's 4. What's the 5th and final piece of this future strategy?
The 5th is Stereotherapeutics, another US dollar $1 million investment. This one is focused on novel therapies for metabolic diseases.
Metabolic again, but different from semaglutide.
Yes, specifically Cushing's syndrome initially, with plans to potentially expand into NANH, that's non-alcoholic steatohepatitis, a type of fatty liver disease.
Okay. And where are they with this?
The update says they're currently conducting preclinical animal studies. So this one is earlier stage compared to, say, the Celogen or iStem projects.
Got it. So xenotransplantation, CRT gene therapy, cell therapy for eyes, an internal cancer drug in phase 2, and early work on metabolic diseases. That's quite a portfolio of bets.
It's fascinating, isn't it, how they're using that solid, profitable generics business, that export revenue stream,
Yeah.
to basically buy options on 5 potentially revolutionary but also very different future medical technologies. They're hedging against the inevitable decline in generic margins by investing in areas where, if successful, they'll own the IP.
The intellectual property. It's a profound strategic balancing act, like you said.
It really is.
So if we circle back to the beginning of our deep dive, it feels like we've uncovered 2 parallel stories running through this presentation.
I don't think so, too.
Story 1 is the here and now. A financially strong company generating good profits, even with margin pressure. You've got that 45.5% EBITDA margin, the huge cash reserve.
Right.
And it's all powering this aggressive but relatively conventional strategy of attacking high-value U.S. generic opportunities, like semaglutide, aiming for those FTFs, the fortress of stability.
That's story 1, absolutely. Secure the present.
And story 2.
Story 2 is the transformation. Using the cash generated by story 1 to fund these 5 incredibly specialized, complex, and frankly risky ventures.
Cell and gene therapy, xenotransplantation, their own NCE.
Exactly. The financial data shows they can afford to do it now. But the long-term future of the company, that might hinge almost entirely on whether one or more of these 5 big bets actually pays off.
That really is the takeaway for you, the listener. Short-term success seems tied to that pipeline of 13 key solo FTFs. Can they execute? But long-term success, maybe even survival in its future form, looks dependent on NRC 2694A, their own cancer drug, and those 4 big venture bets. Agenesis, Celogen, iStem, and Stero.
A clear divide between the present engine and the future potential.
So here's something to think about. Given the resources they're deploying and the sheer ambition of these projects, I mean, we're talking everything from fighting advanced head and neck cancer with their own molecule to potentially growing replacement organs via that $8 million Genesis investment. Which of these 5 high-tech, high-risk ventures do you think has the potential to fundamentally change NATCO's path, maybe even the medical landscape?